Millions of Americans lost everything because two men decided to control gold. The year is 1869. America, fresh from the Civil War, is still reeling, its economy fragile. In this volatile landscape, a new breed of industrialist emerged, ruthless and ambitious. Among them, a figure whose name would become synonymous with market manipulation, J. Gould. Gould wasn't merely a businessman. He was a financial predator, a master of the arbitrage. His partner in ambition, Jim Fisk, was a flamboyant character, a former circus promoter turned stock speculator. Together, they were an unlikely yet formidable duo. Their target, the very bedrock of the nation's economy, gold. At the time, the U.S. dollar wasn't fully backed by gold. Greenbacks, the paper currency issued during the war, fluctuated against gold, which was still the ultimate measure of value. Gould and Fisk hatched a plan of audacious scale to corner the American gold market. A corner, in market terms, is when a single entity gains enough control over a commodity's supply to manipulate its price at will. This wasn't merely speculation. It was an attempt at total domination. To succeed, they needed to buy up all available gold, driving its price sky high. But there was a critical obstacle. The U.S. Treasury, the government, held a significant reserve of gold, which it could release onto the market, effectively breaking any corner. This is where Gould's political maneuvering came into play. He needed to ensure the Treasury wouldn't interfere. Gould cultivated a relationship with President Ulysses S. Grant, a man of integrity but perhaps naive to the machinations of Wall Street. Through various intermediaries, including Grant's brother-in-law, Abel Corbin, Gould began to spread the narrative that a high gold price would benefit the nation's farmers by increasing the value of their crops for export. A compelling, yet disingenuous argument. Grant, influenced by these arguments, and perhaps by his own brother-in-law's proximity to Gould, seemed convinced that the Treasury should withhold its gold. This was the green light Gould and Fisk had been waiting for. Throughout September 1869, Gould and Fisk, along with their associates, began aggressively buying gold. The price began to climb steadily, from $132 an ounce to $137, then higher. Panic began to set in among smaller speculators. They operated out of the Gold Room, a dedicated exchange on Wall Street where gold was traded. It was a chaotic, often raucous environment, a perfect stage for their high-stakes drama. The rising price of gold had a ripple effect across the entire economy. Importers struggled as the cost of foreign goods soared. Businesses faced ruin. The nation held its breath, wondering when the government would intervene. Gould, ever the pragmatist, began to get nervous. He sensed a shift in the political winds, a growing unease in Washington. He quietly began to sell off some of his gold, preparing for the inevitable backlash. Fisk, however, remained brash and confident, dismissing Gould's concerns. He continued to buy, oblivious to the storm gathering on the horizon. His overconfidence would prove costly. President Grant, finally realizing the extent of the manipulation and the damage it was inflicting, instructed Secretary of the Treasury George Boutwell to sell $4 million in government gold. The order was issued on September 24, 1869. This day, Friday, September 24th, would forever be known as Black Friday. The news hit the Gold Room like a tidal wave. The price of gold, which had peaked at an astonishing $162, plummeted. The market descended into pure pandemonium. Brokers went bankrupt in minutes. Fortunes were wiped out. The roar of the Gold Room turned into a desperate wail. Gould, having quietly sold some of his holdings, managed to largely escape the worst of the crash. Fisk, still buying when the news broke, was caught squarely in the collapse, but used legal loopholes to avoid total ruin. The human cost was immense. Farmers, small businesses, and thousands of ordinary citizens suffered devastating losses. The trust in the financial system was severely shaken. Investigations followed, dragging President Grant and his administration into a scandal that tarnished his legacy. While Grant himself was cleared of direct involvement, his judgment and associations were heavily criticized. J. Gould, despite the public outcry, continued his career as a ruthless financier, amassing an enormous fortune. He learned valuable lessons in political influence and market timing, lessons he would apply to future ventures. Jim Fisk, however, met a more dramatic end. In 1872, just 3 years after Black Friday, he was shot and killed by a rival in a dispute over a woman. a fittingly dramatic conclusion to a life lived on the edge. The Black Friday gold panic remains a stark reminder of the dangers of unchecked ambition and the fragility of financial markets. It exposed the vulnerabilities of an emerging industrial economy and the power of individuals to manipulate it for personal gain. It was a pivotal moment that forced the government to reevaluate its role in market oversight and laid the groundwork for future financial regulations, albeit slowly and painfully. The story of Jay Gould and Black Friday is a cautionary tale, echoing through the centuries, reminding us that the pursuit of wealth, unbridled by ethics, can leave widespread devastation in its wake. Unpack the next historical market manipulation that reshaped global finance.